The Hedgeless Horseman here. It's July 9th, 2022. In this video, I will try to lay to rest uh, for good the idea that uh, it's a big disaster if you're down minus 50% or 60% or whatever, which I constantly see people talk about and give themselves reasons for why they want to quit, want to throw in the towel because it's not working. It's not you're not supposed to be down 50% or whatever their justification is for it. I mean, to me, that's just that's quitters being quitters. And I see people complain about this and that, and you can't beat this market, and the banksters, and the uh, insiders fleecing, yada yada yada. I mean, to me, that's like, I mean, you don't see me complain too often. Yes, I can complain about the valuation. I mean, that I can't believe the price to value gaps, etc. Uh, but instead of complaining and throwing in the towel, I mean, that's when I typically buy. Because I realize it's an opportunity, and I just am a bit amused by the fact that it's like I have no idea how anybody can sell stock X at these levels. Anyway, so let's just start off with gold. We've seen a sell-off recently, which you're probably aware of. Paper gold. RC, interestingly enough, is down here, and it's not too many times RSI has been this oversold. Last time it got close to this was this bottom here, and then it went from 1680, let's say, to a new all-time high. Yeah. Other than that, you see that in bull markets, you see that in bear markets. You saw it during the global financial crisis, 2008, 2009. I mean, not much to say other than, yeah, this is this is almost like capitulation selling. And if we just take from, I mean, most times actually, there's typically some kind of rally close by. So like every other time, I mean, I see people throwing in the towel right now. I'm quitting. I'm giving up on silver. I'm giving up on gold. I'm giving up on miners, etc. That's what a capitulation bottom looks like. Uh, People sell because they can't stomach it anymore. It's nothing to do with their case really changed, or especially in the miners. It's not like the miners suddenly became overvalued because they're down so much. No, that's capitulation selling. This is an interesting slide I saw today. Gold seasonal composite. Gold spot seasonal composite lasts 47 years. So seasonality is right now in our favor. Sure, I mean, I guess we peaked a bit later than the typical seasonality chart, so maybe we'll bottom. I don't know, a month later, whatever. But obviously, we're going into the strongest period for gold, historically speaking. Make of that what you will. I don't care much because I'm not trading gold, and I'm buying. Where I'm active is in the miners, and I don't look at the gold price to determine that they're like dirt cheap right now. So yeah, let's get into it. I found this. I was trying to find a quote by Charlie Munger, and I just love this post. Charlie Munger said, "If you can stomach 50% declines in your investment, you will get the mediocre returns you deserve." This comes from one of the best investors ever in the history of the world, and this poster starts with, "This makes absolutely no sense." I find this intriguing. I mean, that's what I can't really get. I mean, I'm assuming this, whoever this guy is, either is new to investing or hasn't had really great returns. Because one would think that if you're criticizing someone, I mean, uh, let's say Roger Federer says something, gives a tip about tennis, and you're a rookie or a very bad player, and you have the audacity to basically say that what he says doesn't make sense, even though he's won like I don't know how many Grand Slams and Wimbledons and whatever. I just this is the thing with like people overall. Everybody, and I've said this before. 95% or more. I think it's actually more in the mining sector. Does not beat an index, but it appears that everyone has an opinion, including this guy, even though he's not in the mining sector. But I just find it fascinating. This makes absolutely no sense. And then he goes on to rationalize why, Charlie Munger is an asshat. On that note, the more I thought about this, and the more I see people, complaining about I'm down 50%. Someone recently posted a comment to I think one of my videos, like you're constantly being bullish or pumping whatever. It's like disingenuous. I preach what has worked very well for me, and this is just one example. Imagine, okay, you're the one of the 95% that cannot stomach a 50% retracement, and I'm not talking like this guy. He used Peloton and some other stock as example. I'm not saying you should buy crap that should go down 50%, and you don't have a problem. That's never been what I've said. I've said if you have something that declines 50% that should not go down 50%, that's not really a problem. But if you own Tesla at all-time highs when it was valued at $1 trillion, if that goes down 50%, it probably has no business going back up. So that's a completely different case. So I'm assuming here that you're picking above average juniors or minors or whatever. Take Great Bear. I made this post in late last year, and I said, good luck getting them sweet outsized returns if you piss your pants and sell during corrections instead of buying. Great Bear is still one of the best examples. Look at all these corrections. First of all, here we have the fact that, okay, if you bought in after the discovery, where most people say, I've seen that recently as well in some discovery stories, like, nah, I'm waiting. I don't want to chase this. I'm waiting for it to pull back, or let's say, basically, I don't want to chase this. And they think they're buying high or late or latecomers or whatever. You can look at this chart. This was let's say the discovery hold. That's the return that people got who were in the day before. And this is the return that everyone else got if they got in after the discovery hold. The big money is not made on the discovery hold. The big money is made in the years following a discovery hold. And you can see if you can't stomach 50%, somewhere around 50% retracement. Look at all these retracements. Here's almost 30% minus, 40, 46, 48, 17, 16, 42, 61, 22, 25, 25, and I don't know, this was the big one. Okay, 35, and you have a bunch of small corrections in between. This was like I think this was a downtrending action for like 573 days or something like that. How many can you? Most people can't stomach one of these corrections, let alone like a 2-year-long correction, and then all of a sudden, poof, you're up 100% and all-time high. So wherever you bought Great Bear, you ended at a profit. Yeah, actually ended up here. That's funny. Yeah, exactly. I took this the day after the announcement. So you could have bought this at any time, and any correction would be absolutely no problem. And if you bought every correction, you would have made more money than anyone else. So if you can stomach a 50% correction, you can forget about getting a multi-bagger. Throw that out the window, pretty much. You will never get a multi-bagger if you can stomach a 50% retracement. You should be buying the high quality growth stories when they go down 50%. You shouldn't be selling them because I mean, yeah, okay, you threw in the towel here. I bet a lot of people did, especially here. I mean, this grinding action. So you have to decide. It's like you can be one of the majority that makes excuses why you cannot beat this market. You look at your results and let's say they've been poor, etc. So just throw up your hands and say you can't beat this market. I'm giving up. You can't be down 50, 60%. That's evidence that I cannot make money in this market. Or you can put your nose to the grindstone. It's like I had a firm belief that's like I'm gonna beat this market no matter what it takes. I'm gonna figure out how I can use what everybody else does wrong and use it against them. The main thing obviously being sentiment. People panic selling stuff that should not be this cheaply valued. So sentiment is a big thing, and lo and behold, what are we seeing now? This also I find a bit like interesting. I've seen some recently like it's too early to get into miners. I mean, to me it's kind of mind blowing. I mean, this is the largest correction outside of the flash crash. This was a very long correction and almost 51% minus. We're almost up to the same length as this one, and we've already actually had a larger correction than this period. Is this the time to start like to be fancy, to market time? I mean, that's what I find almost hilarious. It's like, when something has sold off right, like really to a large magnitude, then people start to time the market. Now they're going to be selling and buying back lower. It's like you should be doing that maybe up here, but now they're going to start to actually to trade this. It's like it blows my mind. Or Bear Creek Mining. I mean, this is in my opinion not a high quality company, and therefore not a high quality stock. I don't own it. I use it because it's as a sentiment proxy, basically a proxy for junior sentiment, because it's very volatile. It has huge beta to silver. Basically, when speculative fever is high, this goes to the moon. When it is low, it crashes. Okay, look at where it recently touched this level. Touched the low of the flash crash. Even the greatest bear market we've ever seen in decades would have Bear Creek Mining down like 26% from here or whatever. And the same, this was the great financial crisis. So we're okay, let's just take a step back for all the people who think this market is so damn hard and you can't beat juniors. From this level we're here right now, since 2005, that's 17 years. Just take Bear Creek Mining as an example. If you bought this level, any point in time you bought at this level, you were staring at a minimum 438% plus within, let's say, 2 years. So when I'm assuming that if you say you can't beat this market or whatever, I'm assuming you don't have eyes or any common sense. How can it become more obvious when it's like when something is served up on a silver platter? We're at extremes. It can get more extremes, but it's like, who cares if? I mean, people who bought the pick now, they're like basically saying that if they haven't been really successful, they're basically saying that if they're starting to bottom pick now, they're basically implying that the reason for them not overperforming or outperforming or beating the market is because, let's say, they bought here and didn't buy here. That's what they're trying to market time now, basically. No, I think it can go lower. Like, that's your problem. I mean, Jesus Christ. You could, if you even made like just a casual sell zone here and casual buy zone here, I mean, you could still make money on this. You don't need to do the exact bottom tick in order to use sentiment in your favor. It's ridiculous. I just facepalm every time I see that right now. It's like we're at extremes. They can still go down for a short period of time. They can still go down. Um, More in a flash crash or whatever. But the funny thing is, like, take Great Bear for example. After during the flash crash, after it bottom ticked, and everybody sold here. Either they were, I guess, a stop loss was hit, or they actually feared the end of the world and they were gonna buy back later. Okay, let's say they sold here. In I think 48 hours, it was up around 120% Great Bear. In 48 hours, it was up 120%. So anyone who was actually down 50% here, for example, would have made all that back within 48 hours. So, like I said, I have no idea when the bottom is in, but I know it can go really fast when the bottom is in. And all the people who's gonna try to bottom pick, etc. I mean, how many false starts have been over the last 15 years? I mean, this looks like the start of a rally. So anybody who's sold like here and waiting for a rally to buy back in, maybe they bought here, maybe they bought here, and then they went down, and then they sold out. So they bought high because they tried to time, and then they sold low. Maybe they bought in here. You know what I mean? It's like, but if you're a value investor, you're gonna increasingly be buying the lower it goes. So you're not gonna, you don't care about false rally starts. You just know that it's super cheap now. Every time you would have bought Bear Creek Mining in this case at this level, you would multi-bag your holding within 2 years. Same with strategic metals, which perhaps is an even better example. It's like, yeah, we're down here now. It's like, is this the time to, I'm gonna start timing the market here. I don't want to buy here. I'm gonna sell here, and hope it goes here or whatever. And then I assume you think that, yeah, I'm gonna know when the bottom is in, and I'm gonna get a full position before everything is like, have shot up 40% or whatever in 2 days. I don't think so. And it's like when people, I saw some guy complaining that again, that it's like makes no sense that I say you can be down 50% or whatever, and it only works because I have warrants, etc. I didn't start out with warrants, and my main active portfolio, which is that is a small portfolio today, because now years later I'm able to participate in private placements. But no warrants have been included in this active portfolio because I can't participate in private placements via my Swedish broker. So it's like, okay, this was basically the first few months of my investing career in junior miners. I thought I bought low. It went down over 50% within some several months. So most people would have given up here, sold out, because like everybody tells me, you can't beat the market if you're down 50%. So 95% of people would have sold out somewhere along the line here. I bought more and more and more. I think I bought the day miners bottom, because I remember it's like gold was down 1% or something. Even the cashed up like mid tiers, or especially juniors who were cashed up, they were down like 10-15%. Absolute devastation. So I was just piling in. I couldn't believe my eyes. I remember, I think Silver Standard had like, I don't know, 150, 200 million or something in cash, and was trading at like, I don't remember actually the market cap, but it's just ridiculously cheap. Kind of reminds me of I-80 now, actually. This was the rally after the bottom, which I would never have had if I tried to time the bottom and sold out. So again, how big of a problem is it to be down 54% if that gets followed up by a rally of 518%? This is the stuff you'll see when Bear Creek and every other junior go from low sentiment, atrociously bad sentiment, to high sentiment. This was okay, from the great financial crisis. I mean, we're having a financial crisis now. Okay, so absolutely slaughtered. Went up 2,000% in like 3 years. Yeah, so even if I mean even if you're down 80%, that wouldn't have been a problem. So it's like you do whatever you want, you invest whatever however you like. I don't share your profits or your losses, but it pains me to see so many people give bad advice when I know for a fact, or I'm pretty sure they don't beat the index. And I see a bunch of people all the time. It's like they have no business giving people advice, I think. You don't have to be a geologist or a mining engineer to, understand this stuff. This is sentiment. This is how humans work. I mean, it's like I actually think the geologists or some of the geologists and mining engineers might be the worst investors, because they only look at one tree, the one they know about, and then they have no idea about sentiment or anything else really. Then I went into another more than 50% loss from the top here. Yeah, over 50%. That's the second one in 2 years, or yeah, around 2 years. So if you think this period was bad, I mean, I had it worse. Then I had I think it was around, yeah, was it from the, yeah, okay, around the same bottom. Then my portfolio went up 171%. Here, of course, was the time when I was all in on Novo, going into bulk sample results, which is like, in hindsight, that was a mistake. You can't predict the results, but going all in on bulk sample is like going all in on one assay result, pretty much. Yeah, one batch of assay results or whatever. So stupid, and I'm not saying that because the grades were way below expectations from, I think it was Commonwealth or Purdy's Award, or both actually. That's not the mistake, because I can't know the future, but going all in at this point in time was obviously stupid. So that's actually one of the biggest mistakes, I think, simply because it's so easy to see that I was completely greedy. So that was obviously a problem. Yeah, I think that was, yeah, okay, so I went all in. My portfolio, my entire net worth, pretty much, my portfolio went down 30% in one day. One day, and people complain about 50% now in their whole portfolio. I had minus 30 in one day. And that didn't, I mean, after that, learned my lesson. Again, it's like, as long as you learn something. I mean, I've never been all in a stock since then, for obvious reasons, because I do actually learn. Minus 57%, so closing in on a 60% loss. I thought I had, okay, maybe I didn't include the rally afterwards. Anyway, was this the same? Okay, this was the flash crash. This is a perfect example, I think. So this is the flash crash. This is this period in time. So down 57% in 1.5 months. More than cut my entire net worth and portfolio in half, pretty much. In 1.5 months. How many people could stomach that and actually be buying more? Almost no one, given what I see in the comments and on Twitter, and again, all the belly aching and whining. I didn't sell out. I didn't throw in the towel. I knew this was like one of the best opportunities there were. Oh, okay, what happened afterwards? Was I a sucker or not? Up almost 900% from the flash crash bottom until early 2021. So in less than a year, my portfolio, without warrants, without leverage, went up 900%. So I ask you, how big of a problem is minus 50% really? When you actually understand how markets work. Another loss, 33 minus, is like, yeah, happens. 32% minus. And okay, let's get into what I wouldn't say matter, but it's like, okay, this was from the bottom of early 2016 up until today. This is my small but longest active portfolio. I'm kind of playing around in it, let's say, right now, because it makes up I don't know, like 5% of my total portfolio. Up almost 5,100%, and I was up around 6,700 before a peak here in 2022. Again, lately, last 1.5 years or so, or last 2 years, I think, this is not a diversified hodl portfolio. I'm much more, let's say, active and much more concentrated, because again, it makes up like 5%. Still, big correction, obviously, like most other people in miners. Does that look like a problem? I've shown you every other time this portfolio has had minus 56, minus 55, minus 57, minus 32, minus 34. So do you understand how much my portfolio would need to go down now for me to not be in a profit since this bottom? We would need to drop, I don't know, I haven't calculated, let's say 90% down from here. Basically everything trading way below enterprise value. And the funny part is that if that happens, it's just going to bounce 1000% or more on average each junior when we actually go to a sentiment high. So it won't even be a problem. I get frustrated because it's like I keep repeating these points, but I know some people actually really get it, and I'm happy for them. But it's like pains me to see that so many people buy into everyone else's BS about, there's some great disaster if you're down minus 50%. Remember that Charlie Munger mentioned that if you can't stomach a 50% correction, you don't deserve to have outsized returns. And he was talking about the broader stock market pretty much. I mean, regular companies. Well, I'm in the junior sector. You're probably in the junior sector. A 50% correction in juniors is nothing. A 50% in the stock market almost never happens. So basically what Charlie Munger is saying is that would be a lot worse, because nobody is accustomed to a 50% loss in, the broad stock market index, or, blue chip companies, whatever. But so it's kind of weird that people can't even stomach it in the most volatile sector there is basically, where 50% correction is like happens every other year at least. So let's take an example here, just to really hammer in the point here. I actually went back and back calculated this for fun, just to again prove my point, and hopefully will force some people to stop making excuses and actually take responsibility and actually do the hard work that is required, and build up the fortitude that is required to actually have some solid returns over the long term. Because I've showed you that you can have massive returns in a short period and massive losses, but it's the long term, it's the total portfolio that matters. I don't care about people who post one trade they did or one stock they own that is up. If their returns were so great, they would be bragging about their portfolio returns. That's why I don't try to bash anyone's trade. I don't bash typically any company really, especially ones that I don't own, because I don't know about them. And I don't take victory laps after being up on stocks or whatever. Because if you shear and focus on every tree, etc., I mean, it's our long-term results that matters for our entire portfolio. Anyway, going off on a tangent there. So let's say, okay, just to drive home the point here, let's say I was the worst market timer in the history of GDXJ. I had $10,000 to invest. I invested that at the absolute peak, all-time high. Absolute all-time high. Highest level ever since in the history of GDXJ. So I go all in at the single worst tick in GDXJ's history. A few years or several years later, I'm down 90%. So I'm riding this. I bought here and I hodled, let's say. or whatever. Yeah, okay, let's say I hodl, just hodl. Didn't do any trading at all, just had a GDXJ or whatever. So I'm down 90%. And from the bottom, I get creative. I get into juniors. I'm a bit more active. I do stock picking. I try to, I figure out how to beat this market, whatever. So enter active Eric. So after being down 90%, because we assumed I was all in at the exact top tick. So I have $1,000 left. Then I 52 bag that money. Because from this level here to here, not to here, but to this other extreme low, especially in juniors, I'm still up 5,100% without warrants. So I have, in this scenario, if I bought 10,000 here, it went down to 1,000. I have $52,000 today. And if you calculate that, that's still, even though, I'm aiming for 50% because I'm ambitious, that's still, if you went all in here, and you started to be, let's say, active around here, let's say I took over the portfolio, whatever, my own portfolio, and actually went into juniors at the actual bottom after being down 90%, I would still have had a compounded annual growth rate of 14.73% if I bought at the exact top, the top of all tops. I would still be beating GDXJ handedly, because that's obviously way down. That's minus. I would probably, I think, beat in the stock market as well. Yeah, I should have. And remember, the long-term average annual returns for the stock market is like 8 to 9%. Sure enough, it's not like, this would have obviously been a nightmare. We're feeling the pain right now after 2 years of this. So when you think about it, would I rather just own the actual stock market, a passive index, and get, let's say, 9% instead of for almost 15%, and being a part of this and having to be active here? Yeah, for sure. The quality of life aspect. But that goes to show. So I guess the point is that you should stop with all the excuses right now, because this kind of cements it that even if I would have bought the exact top, I would still be beating the market and be in positive territory. 10,000 would have turned to at least 52,000. So when people say, bought here and they sell out here, and you can't, and they use this period as evidence of not being able to beat the market, I just crushed your argument. I just threw it way out the window. With that said, I don't think this market is for everyone. The vast majority will not beat an index. So I guess if you don't have it in you, or you know that you don't have the fortitude, you don't have the time to, do the due diligence, think about things, etc. Yeah, you should probably actually stick to like a more passive market fund or whatever. But what I'm trying to say is that if you're serious about it, for sure it's possible to beat the market without warrants, without getting into placements. Even if your investing career started the worst possible way, even if you bought this high, and it's down 60%, that does not stop you from having good long-term results. What stops you from having good long-term results is buying up here, selling here, or selling down there, and walking away, and buying the next hot sector. That's what actually kills your returns. Buying high to start, which I've said, is like, it's worse to sell low than to buy high. Because I could have bought the absolute top and it still worked out. Whereas if you sold this, that's kind of hard to recover from, especially if you like buy back here or whatever. I mean, minus 90% and let's say you bought back here, because again, now, like all the bottom tickers, they're waiting for the coast to be clear, so they get in here. Let's say, yeah, okay, it broke this resistance here, so now I actually think we're in a bull. Then bam, 2 years of downtrending action, and then they buy this because, yeah, okay, it's or this price because it broke this resistance line. Bam, and then they sell out. I mean, that's how people kill the returns. Yeah, this is just me showing the calculation. Oh, and one other thing is, like, with a compounded annual growth rate of 14.73%, that 52,000 will turn into 200,000 in 10 years. So even if you have this, shitty start, etc., you could still turn 10,000 into 200,000 within 22 years. That might not sound like a lot, but at 14.73% is actually good returns. It's just that it's probably not worth the hassle. So I guess what I'm saying, another moral of the story is, like, don't start to buy the all-time high, because this example also shows that if 10,000 turns to 52,000 here from going all in up here, if I just did a buy here of $2,000, this would be materially higher. I should do a calculation, but let's say I mean, since it 52 bagged from here when I had 1,000, if I put in 1,000 extra here, 1,000 after having gone all in, but I put in 1,000 extra, so I have 2,000. That would be $104,000 now, just from buying the low and actually taking responsibility and actually, on average trying to pick, good stories with good risk reward, etc., etc. So stop crying. Either you do the work or you should just forget about it, because crying doesn't get you anywhere. You making excuses to, do what everyone else does, that's not gonna help you. I'm comfortable, speaking my truth, preaching my investment philosophy, because it has worked for me, and I've shown how well it has worked. So again, I don't know if we go down here, whatever. Maybe I'll be down 70% before this friggin' down leg is over, and then I'll be up 800%, like from this to this point. I have no idea. Or maybe it goes something like this. It actually goes down, and then it just jumps around for like a year, and literally everyone is out, and then it goes up. I don't know. It's just I'm not gonna be the greedy asshat that starts to try to market time these extreme lows. It's like, who cares if you bought here or here? Even though this is like, I don't know, 20% move down, who cares? It's like, yeah, instead of getting a 1,750 return, I got a 1,200% return. It's like, pick your greed. Nobody's gonna ring a bell at the bottom. No, absolutely nobody's gonna ring a bell at the bottom. We have no idea when this is. I mean, this looked like a bottom. So if market timers, like, they sold here because I think it can go lower. It actually went lower, so they're like, yeah, damn, I'm smart. I sold here, it went down here, and then you see it up. I don't know how much. It's like from bottom, yeah, up 100% in just a few weeks. Okay, for sure people are gonna see that. Okay, look at that candle. Even I was fooled, but I don't care about. Just want to buy low. Typically, so it's like, I'm not piling in here. I'm buying more down here, obviously. But anyone who tried to bottom time that, and let's say they got instant gratification for selling here, it went down, so they feel smart about it. It's like, yes, I'm the best, and then it jumps a bit, and they're like, no, I don't think it's a bottom yet. I don't think. Bam, big candle, bam, up 100%. They get FOMO. People see a trend forming, like everyone. I mean, everything is like momentum driven, and then they buy in here in spades, and then they're down, more. Instead of the actual value, the panic buyer, the value investor is like, yeah, okay, the lower it goes, the more I buy. So maybe he ramped up his buying here, loosened up on the buying here, and buy all the way down here, and maybe even lower. Whereas this guy is like sold here, bought here, and probably sold out here, because now he's going to try to time the bottom again. So this guy is going to grind himself to oblivion because he's going to try to time every bottom. I mean, good luck trying to bottom pick this action. Yeah, just my 2 cents. I really hope someone gets something out of all these rants, because like I I mean, I don't think immense due diligence is even needed now. And I try to, I didn't even, well, I mentioned I-80, I guess, but it's like, I'm not pumping any stocks here. It's like, if this doesn't make sense to you, don't do it. Do your own thing. You should obviously never invest money you cannot afford to lose or will need in in the next 6 months or whatever, because you don't want to need to be, if we're here, let's say, right now, and we go down here, you don't want to need to be selling down here. That I can tell you. That's going to be the most expensive stock sale you've ever done. Yeah, do your own due diligence, make up your own mind. This is, quote, not investing advice. If you like this video, hit the like, share it with people you think need a wake-up call, and yeah, comment if there's some questions or whatever. Bye.